This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin has very low fees, lower than many of the other crypto exchanges in the market. You can also stake your cryptocurrencies and keep 100% of the rewards. There are no fees. Other exchanges charge fees. OKCoin allows you to keep 100% of the rewards. Sign up with OKCoin, link in the description.
Hi, everyone. Welcome back to the Thinking Crypto channel, your home for crypto news and interviews. With me today is Alex Mashinsky, who's the CEO of Celsius Network. Alex, always great to be speaking with you.
Thanks for having me back.
Let's start off with the big news, the $400 million funding round. Can you tell us about that? Who participated and how will you be using the funds?
Sure. So in addition to our existing, some of our existing investors and community members, we've brought in Westcap and Caisse de Dépôt, CDPQ, which is the second largest pension fund out of Canada. This is their first entry into crypto. So we're excited to have dragged one of the whales into the crypto revolution. And, we're focused on really bringing the next 100 million people into crypto. We just crossed our first million users. So this funds will help us both scale and educate people as to why they need to rely less on banks and traditional financial institutions and really unbank themselves.
That is exciting. First, congrats on the funding rounds, but then you went over 1 million users and then you got a pension to invest in Celsius. That's all exciting news. And that seems to be the trend lately. We're seeing pensions, endowments, many different investment firms entering the market.
Yeah, so we talked about these 4 waves of adoption, right? The first it was cypherpunks, then it was libertarians, then we had basically the different types of speculators come in and try to just they thought that they would enter before the institutions and they're going to basically hand off or sell their coins to the institution at much higher prices. And obviously that was a 2017 kind of run up, and the institutions didn't show up in mass, right? So we had a big crash, right? A 60% drawdown. And now finally, we're seeing the ETF issue, we're seeing institutions coming in. So we're seeing across the board allocations to this asset class. It's accepted as an asset class. So it's just happening a little bit slower than what everybody expected.
Now, last time we spoke, you always have these great data points to share based on what Celsius users are doing. So I'm curious, any interesting trends that you're seeing, and maybe we can talk about CeFi and DeFi as well.
Sure, yeah. So like you said, I mean, we watch our community very carefully. It's now 1.2 million users worldwide. It's about 40% Europe and 40% US. That's our concentration. So, and we continue to see a hodling or basically aggregation of different coins, a little bit of testing of new coins that maybe people didn't have before, but I think still Bitcoin, Ethereum are the 2 favorites. And I think again the price movement is there's a little bit of FOMO going on in the last few weeks, especially because of the ETFs. But we'll see. Basically, this week you have a few new ETF launching as well. So we'll see if we have enough volume to actually break to new all-time highs, or we will have some retrenchment and some correction back to that 55,000 level. The Celsius community is definitely accumulating or averaging in, which is what we recommend for everybody to do. But like you said, a lot of other segments of the market there, DeFi, speculators, a lot of NFT activity, right? So that kind of causing some, gyrations in the market.
Now, you mentioned Bitcoin ETFs. I want to get your thoughts, because we didn't get the spot ETF or the physically backed. We got the futures ETF. So there seems to be some good and bad here. What is your thoughts, being that you're an OG, you're building in the market? How do you see these ETFs playing out?
Yeah, so all these markets are interconnected. So we definitely, when you're seeing demand, several $1 billion worth of demand showing up in the futures market through these new ETFs, that makes its way also to the spot market one way or another, right? So, and Celsius effectively creates yield or extracts yield out of both of these markets, the futures market and the spot market, for these gaps in pricing or gaps in liquidity. And we deliver most of that back to our community as yield. So it's actually very good for Celsius because these new markets do have more friction than just traditional ETFs. But all that is good. All that is broader adoption. It means more broker dealers, RIAs, and other type of participants can very easily access markets. Up until last week, if you wanted to buy a security, you probably were looking at GBTC, and that does not necessarily reflect perfectly the price of Bitcoin for a variety of reasons. So these new tools are pegged much better to the assets under management and the price of Bitcoin, which will allow many more participants to come and enter these markets.
So I think some of the common questions that we see from folks who are maybe new to the market is, okay, what's so great about the ETF, and who does it allow to invest in the market, right? Can't you just go buy Bitcoin directly? Can you shed some light on that if you can?
Sure. So for us, people probably watching your show, most of them know how to get their Bitcoin. They know how to store it in cold storage, or how to put it in Celsius and earn yield. But for the average person, especially financial people, they don't know how all that works. They've never heard about private keys or public keys. And all they know is that you buy a ticker, a stock ticker, and it appears in your portfolio. So bridging that gap for them, instead of them, falling down the rabbit hole and spending 6 or 12 months getting educated on how all these dynamics work, it's much easier for all of us if these ETF just solve that problem, right? Solve that gap in knowledge for most of society, right? Most stockholders don't understand how this stuff works, and they shouldn't, right? There's no need for us to teach them. All we want to do is give them that exposure. They get the exposure, we get demand, and when there's more demand for Bitcoin, prices go higher. That's so, like you said, people that already have coins are benefiting from prices going higher because all these new participants are buying a coin that has limited supply.
Absolutely. Do you think the approval of the futures ETF will eventually lead to the spot or physically backed ETF approval? I know Gary Gensler, he was more of an advocate for the futures, but maybe the door is now open that maybe next year or years from now, we get that physically backed.
Yeah, I don't think he's against it. He was basically saying that because the spot market is still manipulated, he felt that both offshore exchanges who were providing leverage and maybe doing things that were not necessarily legal, as well as onshore exchanges not being regulated, those were the two kind of big obstacles. And until that's resolved, he didn't feel comfortable approving spot ETFs. So it's definitely coming. We just don't know, is he basically waiting for Coinbase, for example, to register with the SEC? Or is he waiting for offshore exchanges like Binance and others to cease their operations? But the good news is that the future ETF is here. There is, I think, 3 or 4 of them that already got approved. There's, I think, 15 applications in total. So if you think about each one of them getting anywhere between $500 million and $1 billion worth of liquidity or demand, that will be a very nice incremental demand for Bitcoin, which will again help us drive prices higher, right? More supply, less supply, more demand. This is just one more avenue of demand, which helps all of us, the ones who are hodlers.
Now, we've seen a variety of states, or a handful of states, I should say, that have been pushing back on Celsius as well as other lending platforms. What's going on here? What can you tell us, or take us behind the curtain? Is it the incumbents don't like that you can earn this great yield on Celsius, and they're just pushing back? And is the SEC at large involved, or is this like a smaller state governance thing?
No, I think, look, this is the regulators all over the world realizing that this phenomena is here to stay, and that companies like Celsius with over 30 billion in assets are just too big not to be looked at, right? So most of these were requests for information. There were not anything like, oh, you're doing something wrong, stop. It was more about, okay, what are you doing? How are you operating in our state or country? Show us the justification or the legal reasoning for all of that. And let's make sure that you're a good actor, right? So those are the main activities. Now, there's a separate set of questions, which is, should this space be regulated? Who should be the regulator? What are the laws? And so on. So there's definitely a lot of questions in the air. Currently, I think Celsius does everything we do is according to the laws. We've been compliant and continue to provide service in most of these states without any problems. But we all looking for regulatory clarity. I don't think there's anyone who does not want regulators to interfere at all, or is saying, you know what, none of these rules apply to us because we're crypto, right? So as an example, Celsius filed with FinCEN back in 2018. We filed the Reg D exemption with the SEC. So we were not hiding under a rock, hoping that no one will find us. And I think you're seeing IRS and other agencies basically saying, okay, you know, we know you're around. Let's make sure you're doing everything right. Are you sending 1099s to your customers? Are you following the rules? And all of that is good, because again, I keep saying to customers, they ask me, are you guys going to be shut down? I'm like, no, if they want to tax you, that means they're not shutting you down, right? Because if they were shutting you down, they wouldn't be trying to tax you. So as long as the government is focused on how do we get a piece of the action, all of us will be hodling for many more years to come.
Yeah, you know, you brought up a great point. We're not trying to do anything shady, and the government, the tax man, is going to collect the taxes. But at the same time, what we don't want is overreach. And I think there's a balance there, right? That the regulators have to figure out. I think a lot of folks in Congress are getting educated now about crypto, but there's still some hurdles and roadblocks. But glad to hear that, you know, they're not trying to shut you down. It's just the dialogue, and they're requesting more information. Let's talk about the crypto bull market, the market dynamics, because you always have this a great perspective on the market. You've made some great calls that were pretty accurate. Where do you feel we're at in the market right now as far as bull market? Are we continuing up? And I want to get your Bitcoin and Ethereum price predictions for the end of the year.
Yeah, so last year I hit it right on the nose with the $30,000 prediction for January. This year is a little bit harder because, again, we have many more moving pieces. But I do feel that we are going to retest the 50 to 55,000 range, just because we got here a little bit too fast. And, you know, so, but we will hit, we probably go above $100,000 this year. And I'm expecting 140 to 160,000 before tax day, before April 15th. Originally, I predicted that price before the end of the year, but because of the Chinese crackdown and the regulatory crackdown, we kind of went sideways for 2 or 3 months, which is kind of pushing us into 2022. But there's no question that there's an acceleration in adoption, meaning huge companies like PayPal and Square and others and Robinhood are all offering really easy access to crypto. And even Walmart now I see has ATMs. You can exchange your loose change for crypto, right? So I'm just seeing it popping up everywhere, which creates less and less friction to buy Bitcoin and Ethereum and so on. And all that is going to drive adoption higher. What we don't know, the piece we really don't know, because we know what supply looks like, right, from the mining side. What we don't know is really how many sellers we're going to have at 70,000 or 90,000 or 140,000, right? And every hodler is going to be tested, right? And we'll see if you really have diamond hands or you are going to basically sell some. Now, again, we don't provide investment advice, but my personal recommendation for what I do is that you do need to rebalance. You do need mentally to decide what is the maximum size of crypto inside your portfolio. And if you say, for example, crypto cannot be more than 30% of all my holdings, including my real estate and stocks and everything else, and crypto pops up to 40%, you need to sell down. That doesn't mean you don't have diamond hands. It means you're a hodler and you're smart enough to rebalance your portfolio. Those two go together. And a lot of people forget to rebalance. And then when it crashes, they feel like, oh, I had such a great opportunity. I didn't do anything. So rebalancing forces you to take some money off the table. And if Bitcoin takes a retrenchment, guess what? You can average in using those stable coins to average in. And the beauty of it is that while you're sitting and waiting with stable coins, you can earn 8.8% on Celsius. So you get paid to wait, right? You get paid to diversify or rebalance. So those are just amazing tools that most people just don't have. You can't do that with your broker dealer. You can't do that with your bank. So here you actually get paid to do even better.
Yeah, absolutely. I mean, part of my strategy, and like you said, you can earn, the yield on that is I'm positioned in Celsius and I have what I'm potentially going to cash out, what I'm holding long-term and earning yield. So there's just some great options in crypto. And I'm glad that you guys are providing such a great service. On that note, I want to talk about, what makes Celsius network different from other platforms. I think you've always been transparent, which I really appreciate. You're always doing AMAs and talking about what's happening. I wish more crypto companies would do that as far as lending platforms and exchanges. So tell us, if you can, what makes Celsius different?
Sure. So from day one, this was built as a service for the community, right? It's not like you see most companies in crypto really have copied this or that model from Wall Street, and they're just doing it in crypto, right? They charge you crazy fees. They charge you withdrawal on your transaction, withdrawal fees. Celsius doesn't do any of those things, right? So I kind of built the perfect service for myself. Okay, I want to earn yield. I want to be able to take a loan and defer my taxes. I want to be able to buy different coins without paying any fees. And by the way, today we're launching our swap service. So you can swap from any asset to any asset without a transaction fee or spread. Like even Uniswap charges 0.3%, right? Wow. How about 0.0%? Wow. So Celsius guarantees the best execution, much better than even Coinbase Pro or any of the major platforms that you're familiar with. Why? Because we don't charge any fees. So I built a service that I wanted for myself, and 1.2 million people showed up and said, hey, can I get on the same bus? Can I sit right next to you and earn that same 8.8%? So really, when you look at different companies, when you're selecting vendors, you have to really pay attention as to why are they doing it. Are they doing it because they want to go public and they want to really enrich themselves, or they're doing it because they're passionate about the community, about enablement, and what's the history of these people, right? I created Voice of IP, 5 billion people use that, right? So you can see a 30-year history of me enabling or taking power away from monopolies like the phone companies, like the banks, and bring power back to the people. That's my life mission. That's what I've been doing for a very long time. And here we have a very unique opportunity where we, the people, can win before Goldman Sachs, before Morgan Stanley, right? Because we got in on the next big thing before these giants, right? That normally never happens. You're usually the last guy. You're the guy they dump on. You get to buy Coinbase stock when it's trading at $100 a share, not when it's a private company and you bought it for $1 a share. So with Celsius, we enabled our community to participate in 3 different ways. You can earn yield, and you can earn it in kind, or you can earn it in our token, right? If you're outside the United States. Second one, you can basically participate in the token appreciation. So as the company gets bigger, our token value increases as well. And the third one is we allowed members of the community to come in and invest in the equity, right? Invest side by side with our investors, with Westcap, with CDPQ, and so on, which normally you don't get an access to, right? You are excluded from that type of participation because those rounds are usually being kept only for the either very well connected or for the VCs and so on. So acting in the best interest of the community, or doing good and then doing well, is one of our cardinal principles, and I think Celsius does it better than anyone else in crypto.
I love the 0 fees swap. That is awesome. I love that. That's great news. And I didn't know, and you brought it up, the ability to invest in from an equity standpoint. I did not know you offer that. That's something I want to look into, because to your point, many people can't touch these things because they're not accredited or they're not a VC, right? So that's
well, you can't. Yeah, you can only. We didn't change the laws, right? So you still have to be in the US. You have to be accredited.
Oh, okay.
But in our last round of funding, we enabled over 1,000 people to participate. Most of them were outside the United States, and outside the US, you don't have to be accredited in most countries. But in the US, the limit is up to 99 investors, and they all need to be accredited. So there's still some limitation. There's still some rules that you have to follow. But even as an accredited investor, try to go and invest in Coinbase as a private company, right?
Yeah, it's not happening unless you know somebody at Andreessen Horowitz or something like that.
Right, or FTX, or try to get in on any of these companies, right? So my point is that many projects in crypto, they say that they are here for the community, but they act very, very differently, right? So what we're trying to do is really make sure that we create new rails, new infrastructure that is here for the people, right? That benefits all of us, instead of benefiting just a few very large companies. Again, like Coinbase. Coinbase was a perfect example of, again, we all made Coinbase what it is. We all use it to buy coins or exchange coins or whatever, but none of us got to participate, right? And there's no firm on Wall Street that charges the fees that Coinbase charges to buy or exchange crypto, right? Yeah. You trade for free. You can go to Schwab or Fidelity or whatever and trade for free. Yet you're paying 2 to 7% on some of these transactions on crypto. So these are just examples of things that Celsius is trying to eliminate. And we're not just talking about it, right? We're paying the highest yield on assets. We invented the whole category, right? 2 years before DeFi, Celsius launched yield on what's now 45 different assets. We also manage the most. We now have over 30 billion in assets, serving over 1.2 million people. So we really trailblaze the path of proving to people that you can be very successful company. Obviously, Celsius is worth billions of dollars, and still give most of the value back to the community, right? That is really the aha moment that most people didn't believe. Most people were like, wait a second, Celsius paid $1 billion to its customers. How is it going to make any money? How is it going to be worth anything if it's giving all the value back to its customers? But the beauty is that investors love fast growing companies. And they're basically saying, it's okay that you're giving everything back. WhatsApp gives 100% of its value to its customers. It doesn't charge any of us anything, yet it was sold to Facebook for $22 billion. So there's many examples where doing good by your customers or your community doesn't necessarily means you don't get that fancy unicorn valuation.
Yeah, absolutely. And I think it's so analogous to crypto Metcalfe's law, right? And that is adoption of the network. And regardless of fees or no fees or whatever it is, if people are there, there's value. So you're getting that value. I mean, just look at Facebook. Before it started monetizing it, it had a crazy valuation, but because people were there. So I love.
Yeah. So you bring a very important point, because the fight between TradFi or traditional finance and CeFi or DeFi is over trust. Before you fight over the assets, you have to first win the trust factor. Meaning you have to convince very skeptical people who think that getting paid the 0.1% from their bank is the right thing, right? And you come to them and you say, no, you can earn almost 100 times more. 8.8% is almost 100 times more than 0.1% you earn on your bank. And that's really where the gap is. The gap is in trust. So what we're trying to do, the reason Celsius has done so well in bringing first-time users, women and others, is because we don't charge any fees, right? I mean, the whole point, you can't bring people over and then charge them the same ATM fee and withdrawal fee and inactivity fee and overdraft fee and so on, right? So we just call it something else, right? But we are behaving, many of us are behaving the same way banks behave. So really, I have a visceral reaction when I see crypto companies doing the same thing, where we vowed. I mean, read Satoshi's paper, right? I mean, it's right in the first block. It says, this is all about replacing the traditional financial system. And now we're allowing it to be corrupted by bad practices. And that's really talking about regulators. That's what regulators should be looking at, instead of looking at, okay, you pay too much interest to people all over the world.
Yeah, that's a great point. A couple more questions and we'll wrap it up here. Do you hold any NFTs, and is Celsius looking to do anything on the NFT front?
Yeah, so we have hundreds of NFTs. We were definitely a participant in the market. I think we're just at the early innings of the non-fungible version of crypto, right? We have the fungible part, Bitcoin, Ethereum, and so on, is we've had plenty of practice, right? With tens of thousands of different projects. The NFT space is still experimenting with, okay, what is the use case? What's the right way to scale? Who are the customers? And we're seeing a lot of hype, a lot of people FOMOing into this or that issuer or asset. But we still need more time, I think, to figure out, okay, what is the winning strategy? What is sustainable? And what type of platforms are going to basically provide these services?
Yeah, I agree. There's just a lot of noise right now. It's a lot of hype. I mean, it's cool. There's some nice stuff out there, but yeah, sometimes it's which direction do you even go? It's just so much happening. So Alex, I wanted to ask you about taking profits versus taking a loan on your crypto assets. This is the debate I've seen happen among different groups in the crypto community. What is your perspective on that?
Sure. So look, we've seen, I don't know if you saw that article, I think it was Wall Street Journal, that Bezos and some of the other richest people in the world, Elon Musk, have not paid any taxes, like less than $1,000 in taxes, yet they're spending billions of dollars on buying homes and obviously living the life and so on. And people are scratching their head and saying, how is this possible? You know, they're cheating. They're not cheating. They're just borrowing against their asset. The beauty of the tax code is that everything the billionaires can do, you can do also, right? So if you have Bitcoin and you were smart enough to pick it up at $500 or $1,000 and it's now $60,000, if you sell it, right, to average in, as we talked about before, or to basically rebalance your portfolio, you owe taxes, right? So comes tax day, you have to give a big chunk of that to the federal government and to your state, if you live in a state that charges you taxes. But if you borrow against it, so for example, Celsius can give you a 1% loan against the asset, right? Because it's an asset-backed loan. We hold your Bitcoin. We know you're not going anywhere. And we'll give you 50 cents on the dollar as a loan at 1% per year. You can't do better than that. So you're deferring your taxes and you get to spend the money. You can pay off your credit cards. You can buy anything you need. You can pay for college or whatever you need to pay for. So it's definitely a very, very powerful mechanism that, again, the richest people in the world use. So these are two tools you have to use together. Yes, you still need to rebalance, but you can also use the borrowing or the margin borrow, right? That's what it's called in professional terms. Margin, taking a margin against your asset to basically spend it somewhere else, right? Some people use it for leverage. I want to buy 2 Bitcoins with my Bitcoin. I don't recommend that, right? You're already in a very volatile asset. So the point is if you're borrowing at 1%, go pay your credit cards on which you're paying 24%, right? That is a no-brainer deal, right? You're deferring your taxes and you're eliminating your liabilities and the money that you're spending on interest, right? So those are great examples of using loans like Celsius offers.
So for those who are new to the market, let's go through a scenario. Let's say I have 1 Bitcoin. Bitcoin hits $100,000. I throw it into Celsius and I borrow 50 grand if it's 50 cents, right? And I can then use that 50 grand to do whatever I want, pay off debt, to your point, buy something, fix my house, whatever it is. And how am I paying back that 50,000 as you hold the Bitcoin? Is it a monthly thing, yearly thing? How does that happen?
Yeah, so first you either earn interest or you take a loan against it, right? So you have to choose one of the two. So you can transfer the Bitcoin and earn 6.2%. You don't have to do anything, it's automatic. Or you can flip immediately and say, you know what, I need that 50,000 to pay off my credit card. So now you have 1 Bitcoin and you have a $50,000 debt, plus you're paying 1% interest, right? So if Bitcoin goes up, again, you can sell some of your Bitcoin to pay off the 50,000, or you can use other sources to pay off your 50,000. But during the term of the loan, which could be several years, you're only paying 1%, right? So on $50,000, it will be $500 a year. That's all you're paying.
That's
right.
Yeah.
Exactly. So that's obviously much less than what your credit card charges you for whatever balance you have there. So that's why it's a great use case to borrow and pay it off. Now, again, if Bitcoin goes down in price, you do have to, you may need to put more collateral. That's why we also offer a 33% LTV or loan to value ratio and the 25%, right? So the chance Bitcoin will go down 75% is close to zero. It hasn't happened. I think it only happened once in the last 13 years since Bitcoin was created. So if you don't have additional liquidity, you probably want to take the 25% LTV loan. If you have additional liquidity, you want to take the 50% or the 33% LTV loan. So we offer different durations, different LTVs, and each person has to decide what's my use case and how long is this loan for. For example, you're just waiting, you took a loan now, but at the end of the year, you're going to get a bonus from your employer and you're planning to repay that. Great, use 50%. You may need the loan for 3 years. I would definitely use a 25% LTV.
That makes sense. And it's certainly a lot cheaper than capital gains tax, which
yes.
is highway robbery in my opinion, but you know.
Yes. So these are, again, tools that everybody has. The piece that I think most people miss is they think that only billionaires somehow have all of these really sophisticated accountants and lawyers who whisper in their ear these rules that are no one else knows. No, here, I just told you the secret, right? And you have the tool. You go in the Celsius app, and in 5 minutes, you can take a loan. In 5 minutes, right? And do the same thing that the billionaires do with their fancy advisors and accountants.
Yeah, and that totally makes sense, because if you pool a ton of your crypto together, you can honestly take, just depending on how much assets you had and the valuation of the asset, you can take out millions if you wanted, I'm assuming, depending on how much you have, of course.
Yeah, we don't have any limitations. The largest loan we've done was $100 million, right? So a single loan. So we are, again, we hold the assets. So we have no problem. There's no credit check. There's no employment verification. None of that, right? Because you're giving us an asset and we're giving you a loan against it. So, and again, Celsius tries not to liquidate anyone. Of course, again, you're going to get a margin call, but we're not trying to grab your coins, right? I mean, we're trying to make sure that you're a customer of ours for life, but you do need to be responsible, right? If you over leverage yourself, if you take too much debt and Bitcoin does crash, you are going to need to put more collateral, or you're going to need to sell some of the assets.
Yeah, and that's, that totally makes sense. And it's, you have a personal responsibility to do your finances and understand your risk levels. So absolutely. But I love that. And to your point, it just changes the dynamic of borrowing and lending and DeFi, because like you said, no credit check. You don't need to know who I am. You just take the asset, hold the assets, and that's it. Which is, I think, groundbreaking. I did want to get your Ethereum price prediction at the peak of the bull run, if you have one.
So Ethereum, I think it really depends on when ETH2 unlocking happens. I think right now there's a lot of Ethereum being taken off exchanges and locked into basically the yield platform, and as long as that continues, we will see Ethereum prices keep going up. So since we don't know when that's going to happen, if it's February or if it's May next year, or the longer it happens, the higher the price is going to go. So I definitely think we can hit new all-time highs, so $5,000 or $6,000. If it pushes to May or beyond, meaning Ethereum has delays launching ETH2, we may hit even a $9,000 or $10,000 per ETH. But I do feel that the minute those contracts unlock, there's going to be many people who are tempted. Today they can't sell, right? They're locked into that contract. Many people who will be tempted to sell, so we will see substantial correction. So again, a 30 to 40% correction. So depending where we see that high, you can expect to see a drawdown and a new base being established. So that's my prediction for 21, 22.
Alex, always a pleasure chatting with you. Appreciate everything you're doing in the crypto market and what Celsius is doing. So thank you for joining me today.
Thanks for having me back.